Hi there guys, hope you're all well. Welcome back to a new video. This is going to be a video breaking down an Australian dollar US dollar position that I took a week or so ago. Now, the reason I want to break down this trade is due to how well the trade ended up doing. Now, you'll see that I did accidentally make a mistake with this position, and that's something I do want to break down. Before we start, I just want to quickly show you the deal map, as you can see here, which obviously shows that the position did get taken, because I know some people do require evidence with these things. So let's quickly break down the reasoning for the trade. So price had officially broken structure to the upside on the 1 hour time frame, and I was now looking for shorts within the market. So all I did, I drew my Fibonacci from the high down to the low, and I noticed that there was a 100 EMA nicely respected in the past over here, and then was going to be broken, retested. I also identified that the 50 Fibonacci lined up with the EMA alongside the round number to the right hand side of 0.6750. If you also want to take it one step further, you could say that there's a nice key level here and also a break and retest area. So multiple reasons to get into this position. When I was looking to enter the position, what I'm going to quickly show you is the trade playing out. If I move this, you can see that price came up and tagged me into this position. Now, when I am looking at this form of market, there are a few things that I am taking into consideration. The first thing is always going to be my stop loss. My stop loss in this scenario was 10 pips, and it might have even been 9 if I'm not mistaken. But either way, it was 9, 10 pips, and my TP1 was going to be down here. So the reason it's down there is because if we're looking at market structure, if price was to break or even retest this level, price can still potentially be bullish, pushing up to get a reaction. So what I did, I identified this as my TP1, which was at 2 to 1. And then I also said I wanted to be break even on the trade by the time price was to do a break and retest of this area. Main reason being, if we're looking at this market structure here, you can see price is continuously doing that. So I want to be break even by this point, just because if the trend was then to continue upwards, I would obviously then get stopped out, assuming price bounced at that level. So what I then did, I looked into the market, and as you can see, I went break even at this point here. And then as you can see, price continued to push down. Now, in this scenario here, I actually went to partially close my position because if you don't know, I do take partials and I leave a runner on every single position, but I accidentally closed the whole position instead of leaving a runner. So I ended up closing 2 hour on this trade. I made 2 times my risk, which was not bad. But then if we watch what happened following that, is that price into the following week started to absolutely crumble and has done ever since. So if I'm just zooming out of this, my runners don't have a time expiration. I literally just let them run until a counter trend position presents itself. So that allows me to obviously take risk-free positions within the market. So if we look at to where price is currently at now in the market, it's down here. What we'll notice is that if we look at what would have been my runner, if I just don't make an error there, if we look at my runner, then you can see that at the height of the runner, you'd have been running 271 pips, which is 30 to 1. So assuming I left half of my position, the runner at the biggest point would have been running 15% based off 1% risk and a partial. You can see now that price has now continued to push lower, but we've now had a break retest of this key level before price can potentially push up. When you have runners within the market, there's a couple of options what you can do. You can hold the runner with stop loss at break even, or if you want to be aggressive, you can trail your stop loss when price makes significant pullbacks, and you could have potentially, if you didn't want to risk it, have been able to hit your trailing stop here at 22 to 1, which would have been 11% if you'd have risked 0.5% on the runner. So that's just something I want to take into consideration, is that moving forward, obviously, let's stick to the plan. It was an accident that I did close the position, but I still managed to bank 2 hours from the trade, and I just wanted to explain the reasonings why this trade was good and why I got into the position. So I'm hopeful this helped, guys. If you have any questions, please leave them in the comments, and I will see you in the next video.